You founded one of the largest communities for aspiring VCs, and now you're at Intuit's CVCR. Welcome to the podcast, Tanvi.
Thanks so much for having me. It's good to be on.
Could you really talk about your journey from the beginning of being interested in VC to right now at Intuit?
Of course. So I started my career right out of undergrad as a consultant, and like every good consultant, I did my stint at my company, and then went to business school to figure out what I wanted to be when I grew up. And really, when I went to business school, I was thinking really critically about where I wanted to shift my career and where I wanted to go. And I noticed that all of the roles I was seeing across, PM, banking, consulting, et cetera, even working with startups, which I had a chance to work with a few, they really wanted to sort of leverage and take the consulting skill set I had learned and apply it to their roles. And I really wanted a job where I was going to learn net new skills and like try something completely different. So I just remember reading a job description for venture capital and thinking this is a really great blend of taking advantage of skills I've learned as an English major, as a consultant. You're constantly synthesizing and putting information together to create this like cohesive framework that you share out. And I saw that reflected, plus a lot of net new skills that I was going to need to learn. So for me, discovering venture was really more about the skills I would get to learn, what I would get to do day to day, while I was and continue to be excited about working with startups and being on the forefront of innovation. I think for me, and this is what I tell a lot of people too, I'm like, you have to enjoy the day to day, right? You have to enjoy what the job is at its core, because there are so many ways you can work with startups. There are so many ways to engage in the ecosystem, right? Like, why is being an investor what the right fit for you? So that was the general gauge of why I wanted to pivot in. And I think more tactically, like I wanted a job where I was using Excel and finance more. I did investment management in undergrad. I really enjoyed that. And I found that in my consulting roles, I was doing more process optimization, like tech configuration, those types of implementation roles. And I really wasn't at the core of what's driving the P&L in a business. So I really wanted that in my role. And of course, venture is all about your returns, helping companies grow, all of that. So I'm glad to be in a position where I get to do that.
I'm curious, in venture, there's tons of different areas that you can focus on. What is your superpower?
When it comes to my superpower, I would maybe put it in two categories. One is just industry focus. I think being at Intuit, seeing how like this large public company works and understanding various different business models that exist in fintech is more or less what I would call my superpower from an industry lens. How a lending business works versus usage based versus subscription, all really different. And I think being at Intuit, seeing how enterprise partnerships work, learning how to actually like land into it as a customer, which is pretty hard, just FYI. I think that is another huge skill set I bring. I think on a more general level, venture is in so many ways more or less a sales job. And I think a big superpower I bring is just my ability to connect with people, whether it's founders or other investors. And it's from all of the small things like small talk, remembering things about them, to bigger things like, hey, let me make this intro for you, or actually, my perspective on what you're doing is XYZ, and that's additive for you to you for ABC reasons. So it's a little generic, but I really think being able to connect with people, have a rapport, and like have a presence in this space makes a huge difference. And maybe I'll give you an example, and then I can kind of go on to the next question. Like I had, one of the Intuit recruiters tell me when she's been doing screens for like an open role on the team, she's heard a lot of people have come across my name or come across my profile, and like hearing those types of feedback loops and knowing that I'm doing my job well and I'm present in the space. People know of me. They hopefully have a strong positive impression of me. Something that's hard to do. It's taken me more or less 3 to 4 years to build that up, and I hope to keep doing that. So I would definitely say that's one of my superpowers as well.
Does that mean that if someone is not a people's person, someone who is more of an introvert, does that mean that they shouldn't be in venture?
I consider myself an introvert, contrary to what I may have just said. And I think a common misconception about being an introvert versus an extrovert is how chatty you are and how you are in big social situations. But really, it's more about where do you get your energy from. So I do find being around people is draining. And I find time by myself to recharge is what refreshes me. And so I think venture really is for anyone that's interested in the day to day, right? For me, it was a lot of how do I get past not wanting to be around people constantly to like be present, going for dinners, going for happy hours, talking to people all the time. So I think it's a good litmus test of, can I get past this? Can I learn to live with this, or can I not? And it really depends what fund you're in. You know, some funds highly prioritize being out there, meeting everybody, and some funds are extremely focused and they want you to do a lot of thesis building work. They want you to be talking to really targeted, intentional people. So I really just think it's about finding the right fit for you. And I think it's about being really intentional where you spend your time, right? Like in my first year, probably went to every single event I was invited to, and now I don't. And I think it's about trying to build genuine relationships in the space. So when you're at dinner with these people, yes, you're talking about work, but it's still recharging in that you're connecting with someone and they're asking about more than just where you invest and what is your perspective and can you introduce me to someone. So I think there are a lot of ways to make it work for you if you are an introvert. But at the end of the day, if you're not interested in, I would say, deal-based work, if you're not interested in like chasing founders down, pushing and closing, those types of things, then maybe not the fit for you, but it's more of a skill set interest rather than, I think, being an introvert or an extrovert.
Yeah, that's the thing is that there are tons of parts that aspiring VCs can go into. And obviously there's different roles in firms. So what does your day to day look like? Choose a day from maybe last week and then go through like 9 a.m., 10 a.m. I do this.
I would say I usually start my days by just going through my emails, checking LinkedIn, and seeing what's going on, who's messaged me, who do I need to get back to. From there, it's a mix of various calls. So I am talking to founders. At Intuit Ventures, we do early growth stage investments. So I talk to a lot of early stage investors as well. And then as a corporate venture arm, talk to my BU counterparts in addition. So those are, the three buckets of calls that I will typically spend some time either on sourcing. So I'm looking at companies that I've seen online or that other VCs have sent me. I'm trying to decide which ones I want to talk to, reach out to. And so that's another piece of my day. If there is an active deal I'm working on the memo, I'm doing my modeling, etc. And then lastly, maybe not day to day, but at least once or twice a week, I'm talking to my portfolio companies, either helping them try to navigate into it or, reviewing their quarterly results or just in general texting, chatting, figuring out what's going on and where I can help.
And in terms of a corporate VC arm, like what does that actually mean for the aspiring VCs listening to this? What is
Yeah.
different from that and traditional VC funds?
A corporate venture is a pretty broad spectrum. The exact function and goals really depend CVC by CVC, but in general, you have, two ends. One is fully strategic and one is fully financially driven. So when I say strategic, I mean that the fund invests with the goal of driving value back to the company and like that's all they do. And when I say financial, it's a corporate venture arm, but it's more or less like asset management. They are fully returns driven. So Google Ventures or GV is a good example of this where, Google is their sole LP and maybe in some of their recent funds, they might have changed it. I'm not sure, but they are fully returns driven. So they invest across the board. So every corporate venture arm kind of falls somewhere in the middle or at one of the two ends. And it's really just important to assess what is the goal of the program that you're talking to if you're considering a role at a CVC. So some good questions to ask are, do you need a BU sponsor or do you need a commercial agreement prior to an investment, which typically signals the CVC is more on the strategic side. I think asking that is important, asking what is the timeline to close a deal. Typically more strategic CVCs requiring like a partnership or like a sponsor will take a little bit longer. Asking, tell me how, tell me the process your latest deal went through to get closed. How did it work? Who did you present to? That type of questioning is helpful to understand like where on the strategic to financial return spectrum different programs sit. And so that's a high level overview of what CVC looks like. At Intuit, or I would say squarely in the middle, we look for financial return number one, and we need to have a strong strategic value or strategic reason to invest, even if there are strong returns. So for us, it's not a BU sponsor, it's not a commercial agreement, but it's just what are we going to learn either from our customer lens, either from an area that our products invest in, either from areas that, we think are going to be relevant to us in 5 to 7 years. So that's how our program invests. And there's a strategic case we need to work on for every one of our investments.
And in terms of these two buckets, right? people would usually think like financial returns. That means like you get the best company possible. Does that mean that if you're more of a strategic CVC, it means that you might have to sacrifice some of that financial return and not go for the best company, but more towards the best company per se, so that you can learn?
It really depends. What is the goal of the program? So if I am not investing in the best financial performer and like the market leader that I think, chances are my learnings are not going to be as strong, right? Like if the company goes under in 2 years, I don't learn much. Or if the company is clearly getting, wrecked by their competitor, like what do I learn? I learn all the things that didn't work rather than the things that do work, right? So even though I'm looking for a strategic learnings, I still want the best companies in the category. I want to be investing in like the top startups in XYZ categories and areas of relevance to us. And I want to see every single startup that is relevant to Intuit, which is a really, really broad spectrum. I mean, we, obviously have Credit Karma, TurboTax from a consumer lens. We serve a ton of SMBs. We have marketing, e-commerce connectivity through our MailChimp BU. So I think, and this is kind of the value that the ventures program brings to a company like Intuit, where Intuit is very customer first, like what's going on with our customers, what's going on in our product, and bubbling that up. Whereas we are more market. We're like, hey, what's happening in the ecosystem across AI? What's happening in fintech? What's the latest and greatest? And like bringing those market insights to our BU that can then be incorporated into their product roadmap, however they see fit. So for our program specifically, and again, it looks different by CVC, to be successful in our strategic value in everything we do, we have to pick the best performers. And that's kind of what we're tasked with internally of like what's going on in the market, who's the best company, who do we think is going to drive the most return and thereby drive the most strategic value.
And a follow-up to the strategic
Yeah.
investment focus, does that mean that the CVACs that does this will be actually talking with the founders a lot more? Because if you think about it, right, there's the outside market research and then there's the in within market research. So how much times are these founders actually meeting with you guys to provide that data, to provide that knowledge, so then you guys are actually informed and it drives that mission?
We meet with our founders quarterly. I really think this is where venture is such a funny game. Like being an investor does not guarantee you constant communication with the founder. Like you really have to work on your relationships. They are extremely busy. Why are they going to take half an hour to talk to you? Why are they going to take half an hour to answer this question that you need to like get back to your BU? And even if you've made the investment, you have to really work on the relationship. And some of the founders I talk to on a quarterly basis, some of them I talk to more frequently. And, some of them I have much better relationships with than others. And when someone on your team leaves, you inherit a portfolio company relationship. You have to like reestablish and reground and go from there. So it really varies. I would say in general, I'm talking the most to founders who are either seeking guidance on enterprise partnerships or who are trying to, sell to a portion of my BU. That's where I'm trying to guide them and think about what's the best win-win situation I can help them come to. A lot of times founders at the stage we invest in, which is primarily Series B, are setting up sales, go-to-market motions. So if they have a question there where I can help, they'll reach out to me. But generally, it's quarterly touch point on how much ever I can build a relationship and we can add value to each other.
And for all these founders that chooses CVCs, right? What is the really main advantage for them versus a traditional VC fund?
Yeah, so there are a couple of advantages to working with a CVC. I would say number one is the brand value and the brand recognition you get. So if you think about, let's say, a consumer fintech, right? They may or may not know who Sequoia and Andreessen is, but they all know Intuit. I was talking to someone from FedEx and I was like, oh, I'm on Intuit floor 5. She's like, oh, yeah, like TurboTax. I was like, that's right, TurboTax. So every single, not every single, but your end consumer is more likely to know the Intuit name than they are to know these really high quality, tier one investors. So I think number one is the brand value you get and sort of like a stamp of legitimacy of, hey, this company's CVC arm invested. From there, I think, you add value as per any institutional investor. Like I'm helping you recruit your leaders. I'm helping you think about how to scale. I'm helping you think about how your partnerships evolve. And that's again really on me and on the founder for how we build a relationship and the rapport. Now, lastly, for a program like Intuit, we write minority checks. We don't lead. We don't own a significant enough portion of the business to really influence a ton of direction. So the way I frame it to founders is I'm like, hey, look, working with us is an option call, right? On the very best outcome, you strike up a partnership. It's hugely additive to your growth. and we both win. At the worst, if nothing happens, you get a great boost to your brand name. And we're a minority investor who's not in your face and we're not, trying to figure out how to run your day-to-day business. So that's kind of the trade-off. And I'll often talk to founders when they have multiple term sheets and I'll say, hey, you could take this term sheet where one fund is taking up all of the allocation and then you have one stakeholder who owns like 30% of your business, which is fine if that's what you want. Or you can take a different term sheet and split up the ownership so everybody owns a significantly less portion. And then, you have sort of less one party controlling and influencing the decisions you make. So obviously we fall in the latter category where if there's a large fund taking up most of the allocation, we typically are boxed out. But that's kind of the talk track I have with founders. I'm like, hey, you're growing, you're scaling, like you're seeing real traction. Like think about the kind of business you want to run going forward and like how you want the governance to be structured and like is it and like there's not a wrong answer, right? Do you want one major controlling party or would you rather have a number of smaller non-controlling parties that can either add value or not?
And in terms of that, right? So they have the brand recognition and they basically have someone who's hands off. But what if they want someone who's like really hands on? Like, what does the CVC do for them?
Oh, it's pick your own adventure. I am happy to talk to my poor co-founders as much as they want. By the time they've hit Series B, they're pretty intelligent, like they've been through the grind, they're starting to hit product market fit. They don't necessarily need everyday conversations. If they do, I'm happy to do it. So it really comes down to like what do they need? And I'm here for all of it. And some of them just want to talk about Intuit partnerships. It's fine, let's do it. Some of them want to talk more strategically, let's do it. Some of them want like partnerships advice around, hey, how should we think about working with XYZ type of business? Like, cool, let's do it. So it just depends what they want. I don't think it's necessarily tied to being a CVC or not. I think it's tied to does the founder see you as a strategic advisor and have you as the investor, as a minority investor specifically, have you built enough of a rapport? Have you demonstrated enough value to them to show them that you are that type of investor and advisor?
Let's talk about social capital. So
Of
in terms
course.
of that situation, if a founder wants to just talk to a VP or like the president or even the CEO of Intuit, do you just like forward their email and then set up the meeting? Like, how would this actually work out?
So when it comes to talking to my BU, and I have to push my founders a lot, they come to me with the case. I'm like, here is what I know about what the specific person is interested in. Here are my ideas for how you can add value, but like, come to me. What do you think? Why should this person partner with you? Like, what value are you going to drive to Intuit? A lot of startups will come to me and they'll say, well, QuickBooks is a great distribution partner for us. We'd love to like integrate more closely with your data. And I said, that's amazing. Like, it would be a great, all of that. But why would Intuit open up our access and our distribution to you? Like, and it's a frank question, right? Like, if you can't come to me with a clear value add for why it helps Intuit, there's just very limited things I can do for you. And if there's not a value add, like, it's not going to fly with my product teams. So that's kind of the feedback I come back to them with. And this is where I also encourage them that you don't need to talk to the CEO to have a partnership. In fact, the CEO is likely not going to do that much for you. He's going to have a call with you and then he's going to pass you down the ladder. So really who you need to talk to is a really high quality PM or like a group PM or, like a director. And so I tell them, I'm like, you need exec sponsorship and then you need buy-in from someone who's going to do the work. Like the CEO is not going to take you through our risk process, like the PM is going to do that. So I think I try to coach and guide them on let's frame the value add properly together. Let's like align on that, you and me, right? And then let me give you the options for who I think the right person is to connect you and like who I can. I'm sure I can Slack, the CEO or like some of our CEO staff members, but they may not respond, in which case doesn't help both of us. And I always tell the founders, I'm like, you have maybe like one or two times where you can make a good impression on the BU. And after that, like the third or fourth time I'm reaching out, it looks bad. It's a disservice to you to reach out too soon and too often. So I try to like coach and guide them on those various things, which I think is the value of having me on your cap table. Like if you're blanket spamming this person trying to get to them, you don't realize the way that work works and all these like little nuances. So the social capital certainly is a big thing I have to work on in terms of building strong credibility with my BUs. So when I send them a deal and a company, they listen, they're interested in talking to them. But more so than that is learning how to guide the founders properly and how to push them to frame the value in the correct way.
And where would you really start with guiding them in terms of do you actually have all the information of the org chart saying like, oh, this person would be really in charge of these types of partnerships. And this person would be in charge of so and so. So do you know all of that? Like, how did you just like go into it and then gathered all that information, or was it provided to you?
Yeah, I mean, I certainly have access to the org chart through our internal tools, but I think the qualitative things around there are just what you learn by building relationships internally. So obviously my role in venture is to have a strong network externally across founders, operators, and investors. But in a CVC, you need to have really strong connectivity internally. You need to know, again, like a high level exec leaderships, like you need to have a rapport with them, and you got to know all of the PMs as well so that you're able to connect startups appropriately. So it's really a constant like work to-do list item of either regular catch ups with BU stakeholders to learn what they're interested in, to understand what projects they're focused on, to float and sort of share startups to gauge their interests. That's like a big part of my job and my day to day as well.
And once you find that great, amazing founder, what are the top three qualities that makes you choose them?
I think the first thing is just founder market fit, which is, well, I guess maybe the first thing is just a general sniff test. You want to find founders you want to work with, right? Like, I will do my best to convince and sell founders for why they need to work with us if they're not already excited about it. But after a certain point, you're like, if you don't want to work with me, it's fine. Like, I want to work with founders and companies who are excited to work with me and who are excited to figure out how to partner with Intuit and create a lot of value together. So I think the first thing is just a general sniff test. You know, are are you interested? Do you seem like a high quality human being? If I catch founders who are, inflating their numbers or talking about XYZ design partners and turns out they're not design partners, like that's an instant flag. I understand you want to embellish and sort of make your company look good, but at the point when you're embellishing to where I feel you're lying or it's a little disingenuous, I'm certainly not interested in working with such founders. So that's like the first piece. I think the second piece is, yeah, the founder market fit. Like, why are you specifically the right fit to be running a company in this space? That may be your prior work experience, that may be how well you've executed so far and how knowledgeable you are about the business as we're discussing. I think a part of that is also how well are you equipped to run the stage of business, right? A lot of founders are great 0 to 1 people, but at Series B, when I'm coming in, it's more of the 1 to 100. So that's kind of the other piece I'm assessing. And I think the third piece is just like, do you know your business? Sometimes I'll talk to founders and like they just don't have a strong handle on some of the stats they've quoted, or they are unable to explain some historical financials or some historical things that are just a flag. I mean, it's not to say you're lying about it, but if you don't have a strong grasp of your business and your metrics, I struggle to see how you're going to continue executing well. So I think those are the top things I look for. Like, number one, sniff test. Are you a good human? Have you said anything super weird or like inappropriate to me? And like, do you pass the sniff test? Number two is, how well versed are you in the space you're operating? How well do you know your product? And then the third is just knowledgeable about business metrics and like operations and how your org's actually running.
And when it comes to aspiring VCs who are filling in applications, where all these VC funds are like, so you can suggest us a company or two, where would they find all these founders that meet all the requirements? Is it just by going to events? That's how you start? Is it by going to just like DMing people code on LinkedIn? What is your sourcing method?
I can share early stage and growth stage. So from a growth stage perspective, which is again where I'm at, I am mostly looking at Series A companies. So I'm looking at newsletters, funding to understand who's raised funds. I'm talking to early stage VCs to understand who are the up and coming, growth stage companies I need to look at. And for me, the sourcing game is like over a year, right? Like I try to meet companies around the Series A or right after Series A, and I build a relationship to stay top of mind. So when it comes to the Series B, they think of us. And so it's a lot more biding your time, staying top of mind, and making sure you are fully covered in terms of, this company, all their competitors, you've talked to all of them, you've decided, hey, this is the one that I want to work on and prioritize. So I'll stay in touch with this one. For early stage, when I was recruiting for venture, I would meet a lot of founders through exactly what you said, through events and through cold DMing people. Events, depending on whether you're in SF or New York, and I really know how to share resources for both of those markets. Unfortunately, I don't know other markets quite as well, but there are a number of newsletters. So in SF, There is a newsletter called SSIRL that has a lot of early stage events, operator events, etc. So those are always good events to go for. There is Gary's Guide, which has pretty good collection. And I've just found various people on Twitter who collect lists of events weekly, and I would follow them, see which ones I was interested in and which ones I wasn't. And so the events are a bit of a crapshoot. Sometimes they're great and sometimes they're not. The other thing I would do is directed outreach to founders. So that is a cold DM if I've come across their company and I think they're interesting. But more often than not, you need to kind of come to them with some like area of value to make your message stand out. So I wrote a lot of content on, areas of fintech I was excited about. So I would reach out to founders who were building in that space to say, like, hey, are you interested in chatting? Here's an article I wrote. I'd love to discuss this with you, and I'd love to get your thoughts on the space. And that would typically give me a better hit rate than just cold DMing and saying, hi, I'm Tanvi. I'd love to talk to you. And like, you have to put yourself in the founder's shoes. They're extremely busy. They are like running a business, trying to get it up off the ground. I'm sure all of them would love to just chat to hang, but they can't necessarily make the time for everyone's discussion. So, what is it about your discussion that's different, and what can you kind of bring to them? And that's when I saw the best hit rates.
So how do you keep on top of mind for all of these, for example, Series A founders who wants to get to Series B? Is it strictly just because you're a VC, or what else are you bringing to them so that, they can actually just like have you on top of mind and thinking about you when they start to raise the next round?
I think you have to figure out what they need. So, by the time you talk to them, understanding what are the key areas you're working on as business, what are the key roles you're hiring for, and thinking through how you can be helpful to them. Can you send them some candidates for the roles that they are looking for? Can you make some introductions? Or, for me, it's either make introductions to other companies or funds or introduce them internally to start some partnership discussions. I think the more tangible outputs you can have from things that you've done for them, the more likely you are to stay top of mind. I just set a calendar reminder, check in, send an email, like grab a coffee, or I'll try to schedule, a trip to New York or something like that where I'll catch up with them just casually. So it really varies. It depends. I think what makes you successful as an investor trying to stay top of mind is, can you effectively understand like what they're looking for and like how they like to be kind of shown interest, right? Like some people really just care about a coffee and we're like chatting about life and like, we talk a little bit about the business. Some people are like, I want to see you've done like 3, 4 things for me. So like what are you doing? So I try to suss out what are the things they need, what's the right way to build a rapport with them, and it looks different per person, and then I try to deliver and execute on that.
How do you suss it out before you even meet?
It comes mostly through the discussion. It's hard to know before I meet them. So once I've had a chance to meet them and discuss it, it's just what am I picking up on? And then the other way is to back channel, right? Who are the investors who knows them? Who are the founders who know them? Like who's on their board? Can I chat with the board? And if they won't talk to me, maybe someone on the board will tell me like, hey, this is the thing the business needs. If you can do this, I bet the founder will take a call. So you really do have to be smart and strategic and like see around them. If they're not going to tell you, who around them can tell you, and how can you infer? You can, always look on their company's LinkedIn, see if they have a senior role they're hiring for, and be like, hey, I guess they're looking for like a VP partnerships. Who do I know who's a good fit? And I can just email them with that person's resume rather than just emailing them to ask them for a chat. But it's always the best to just talk to them directly. But if not there are plenty of ways to work around it.
On the other side, notice that 90, maybe even 95% of the VCs I talk to really even get an interview at a VC firm, they need an intro. So you're talking about intros. How on earth do you get warm intros to the VC fund that you're applying to?
But this is where your overall networking, how well you've broken into the space kind of matters. When I was interested in venture, I had zero network in startups. I had zero network in VCs. So it really just starts with, all right, I'm going to start following some funds on Twitter and LinkedIn. I'm going to start like reading Medium posts. I'm just going to understand the lay of the land and figure out what's going on. And then you hit up one person who maybe interned at a fund. Then you hit up one person who's like an analyst, and you hit up someone who's an associate. And gradually, as you figure out the lay of the land, you can start getting intros to people who are slightly higher up. I think events are a great place to meet people. I think, reaching out on social media is a great way. I think generally you just have to start somewhere. So which space are you interested in? You want to do early stage, you want to do growth stage, you want to do fintech, you want to do healthcare, climate, like hard tech. I think creating a little bit of focus on who you're talking to and why you want to talk to them and having clear reason if I want to talk to you because I'm interested in growth stage fintech. Like I would much rather take that call from an aspiring VC than someone who's just like, I want to know about venture in general. So I think it's on everybody to do your own research to understand like what is venture, how does it work? And there are plenty of online resources for that. And I think it's on you to do your own analysis and your own work of like, which part of venture am I interested in and like where do I think I want to play? And I think at the point when you figured out those two things, then it's fair game to start reaching out to people to say, hey, I've decided this is what I want to do or this is an area I want to explore. Like, are you open to taking 15, 20, 30 minutes to talk to me. And that's typically the point when I will take an intro call from like a cold DM. And I think from there, it's all about building your rapport. So I talk to somebody, they stay in touch. They send me like an email once every 6 months, or, they're like, hi, I got like an internship, etc. And I think the important thing for referrals, of course, number one is like reaching out, building a connection, etc. But I think the number one thing is like, can I speak to your work, right? If I have just had one call with you, I don't know anything about you. I know your interests, I know your story, but I don't know if you're a hard worker. I don't know how good your network is. I don't know any of those things. So I think when you're asking for referrals, number one, shoot your shot. Like people who ask me and I'm like, no, I'm not comfortable. Like I'm happy to just tell you no. And it doesn't really bother me. Not everybody is like that, right? Some people don't want to say no, or I don't know, they feel awkward. But I think the important thing is to find a referral from someone who's seen your work because I'm unwilling to put my reputation on the line if I can't speak to that. So someone who has worked with you in the past is the most effective referrer. If I really enjoyed my conversation with someone, I always preface the referral like, "Hey, I just talked to them. I don't know their working style, but they seem cool." I think it is getting a referral is number one, building a strong like connection with somebody. I think it's sharing focused interest. I am more likely to send a referral if you're like, hi, I've written like these 4 blog posts about fintech. Now I'm like, oh wow, interesting. Like when I forward your resume, I'm going to say they seem really committed. They've written all these blog posts, right? So I think to the extent you can show you're focused, you are serious about the space you're in, and you can give me some indication of your work products and like how how you operate, I feel more excited or confident about sending a referral. But like by far the referrals that are like the easiest for me to do are people who I've worked with.
Yeah. And that's all it takes is that it might sound simple, but having a referral and having these warm intros really builds up to something that started a while ago. And it could be 6 months, it could be a year ago, but all it takes is maybe even just like one email every 6 months giving an update of your life and how that person's advice has actually affected you. So now let's say you've got that warm intro, you've got that interview. What does the interview stages actually look like for early stage and also growth stage? Because I know you went through like 5+ final rounds.
Yeah, so interview is very fun to fund. I mean, there's no set structure, but generally you will have a few rounds of general behavioral interviews. So tell me about yourself, tell me about your work experience, and I think in those behavioral interviews, you want to make sure you are prepared to answer why do you want to work in venture capital if this is your first VC role? Or like, why do you want to stay? Like, if you're transferring roles, like, what are you looking for? That type of thing. And I hear a lot of feedback from people who say, like, candidates just don't have a good reason for why they want to work in venture. So, as I discussed earlier, in the first question, like, what is it about venture? Like, is it the skills? Is it working with startups? Is it working with founders? And I think like a good litmus test is can you, the reasons you want to work in venture, can you get those reasons? Can you meet those kind of things if you were in a different role? Like if you're an angel investor and you're like kind of investing your own money, like can you still work with startups? If you're in like a platform role at a venture, like you can still work with startups, right? Like what is it about being an investor specifically that draws you to it? You are, you like investments. You are really excited about startups. Like you've spent a lot of time here. Like what is it? You like the skills. Like what is it about venture specifically that draws you there? And I think it's one question, but it's like the easiest way to sort of lose the interest of the interviewers if you don't have a strong, compelling reason for why you want to work in venture. So I think that's number one. Number two, you should be showing up to all of these behavioral calls with some research on the person you're talking to. Like which area of venture are they in, like what specific themes are they interested in, like look at their social media, look at the fund. A lot of times social media or the fund will give you a sense of which specific investments they worked on at the fund, and you can get to know like what areas do they like. So come to the call with either relevant startups to what you're seeing on that person's social media or just like trends, and it can be like, and it doesn't even have to be like you found this most glorious like diamond in the rough startup. It could be like, oh my gosh, like I see you like interested in stable coins. Like I saw recently that Intuit partnered with Circle, which, we just did. We launched it. Like, here is my thought on like what that means for the market, right? It just something of interest to show you're paying attention, the markets, the news, and you're able to translate that into relevance to startup, relevance to that individual. So I think coming to the conversation with that prep, so you can either like they will definitely ask you, tell me an area you're interested in within, let's say, fintech, if you're interviewing for a fintech role, and then tell me a startup you like that you think we should invest in and why. So you should be able to answer why venture, area you're interested in, startup of your interest and why. And then lastly, like figure out what they're interested in and add something of value to them.
Yeah, and fun fact, you were actually chosen because of a live deal, right? During the interview.
Yeah, that's right. So that's kind of what I just talked through was the initial phases, like the behavioral, and then typically all venture funds will give you some type of a case study. And the case study is either here is a fake company, write an investment memo on whether or not you would invest in them or not and why, or it's some type of financial modeling exercise, it's some type of market research project, etc. And for me, my case was simply find a company that we should invest in and write a memo. And I found, a live deal, Series B deal that was relevant to Intuit. So my friend coincidentally was the chief of staff there. So I knew if I picked this deal, I could get all the information I needed. I could talk to the CEO. So I did all of that. I did a financial model. I did a memo. I presented the memo. And yeah, my MD told me, he said, you were the only candidate who ever brought us a live deal. And that was what made you stand out because it was investable for us and it was live. And I introed them to the founder after. Certainly, it's not always easy to find a live deal. It's like there's such a big timing thing of I'm interviewing right now. Are you raising right now or are you going to raise in 6 months, right? So I wouldn't, yeah. So that certainly helped. And maybe the last piece I'll say when it comes to the case study is to make sure you practice presenting your case. Um, I had like my Word doc memo that I sent to the team in advance, but I also prepped slides because it's easier for me to present with slides rather than like scrolling up and down a Word doc. So I would say as you're presenting your case, have slides, practice. Like I actually got this feedback. They were like, you didn't present your work well. And like that's one of the things we're assessing as we're doing the case interview is um yeah, like this is your investment committee meeting. How well are you going to show up and fight for your deal? So make sure you practice presenting. And then for your case interview, try to find like either another investor or another founder, ask their perspective on the space and incorporate that into your investment recommendation. That was the other piece of feedback I got was part of the case interviews assessing how strong is your network. So if you're not able to hit up like 3 payments experts to come to a decision on this payments business, like you're not going to do well in this role. And like he straight up told me that. He said, we don't have the time to coach and mentor you. Like the expectation is you come into this role and you have the network to get the feedback you need to get the decision you need. And yeah, it was kind of harsh, but I was super grateful. I mean, he gave me excellent, amazing feedback. And the next case interview I had with Intuit. So I was able to use that feedback and land the role.
In terms of this case interview, right? There is like a bunch of math involved. There's financial modeling. It seems like you knew some of that. So where would an aspiring VC actually start to just learn what is enough for maybe a 1 page or a bunch of slides memo?
That's a great question. I want to say, I think it's Bessemer. Bessemer Venture Partners has a few memo samples on the website. So I would look at that. I wrote a blog post about breaking into venture, which has like a high level structure of things you want to have. There is a course called Sandhill Prep, I think it's called. One of my mentors, Mike Devlin, put together, which is like an amazing, amazing resource. He's got a bunch of blog posts in there that you can view for free. He has a how to land a venture capital internship step-by-step guide that's free, and then the associate is paid, but I don't know, it's not, I think it's very well priced for the value you get. So I think it's all about just finding the right resources. And then like high level, you want to have like an overview, exec summary, like market assessment, customer description, financial breakdown, like key risks, returns analysis. So I think it's easy enough to find a list of all little sections of the memo, and then you need to sort of research the individual sections, like what is the returns analysis? What are the key unit economics and financial metrics I should have for this type of business? How do I like create a compelling market sizing? All of those things are key skills you need to either teach yourself or you can learn through one of these courses. ChatGPT can hopefully help a lot, but I do think contextualizing it to the specific business that you're assessing is the key part people will be looking for. It's great if you can do a model, but if your model is inaccurate, if it doesn't take into mind the correct revenue structure of the company you're looking, then like it's not particularly helpful for the job.
Okay, so let's say you aced the case interview. What is next?
Yeah, after you ace the case interview, it's hard to say, at the point when you get to the case, when you're at the final round, you're competing against really, really smart, experienced people. So you can do an amazing job with the case and still not get the job, right? They have to see what is it about you that makes you stand out versus like the six other people who did an amazing job with the case. So it's got to be something about either the companies you flagged for them, the conversations you've had, the theses you've come up with, like you need a little something more that makes you stand out. And as we talked about, like for me, it was the fact that I brought a live deal, and that's what really made me stand out. For other people, it's been they got like a really slam dunk referral from like a senior partner or like someone well respected in the space that made them stand out. For somebody else, it could be something you did in your previous role, like you grew revenue by like $3 million by launching a new product. I don't know. And like you did that and you had just like an amazing case interview. So that's what bumps you over the edge. It's really hard to say. Honestly, it's super subjective and you kind of just gotta cross your fingers and like hope for the best after you've delivered a really strong interview.
In terms of after you get an interview and then you've got all of these rounds, how long does that usually last in general? Do VCs just like to finish like, hey, let's do interview today and then another case study tomorrow and then another meeting the week after? Or does it last over a period of a couple months before the final decision?
Some of the processes that I've been in have taken a few months. Some have been, within a few weeks. It really depends, number one, on how sure the VC is that they're hiring for the right role. I think a lot of times VCs will put out a JD, they'll talk to people, and then they will realize, hey, I actually need a more senior person, or hey, I actually don't need a more junior person. In which case, the process will typically take a couple of months as they refine and like sort of cycle through who they need and who they don't need. I think when the fund has like, we have a really clear need for this specific role, they're usually incentivized to work as quickly as they can. Like when they find the right person, they're like, cool, we're done, like back to work. So that can be, a month, a few weeks across the board. It can be a few months, it can be a few weeks. There is no standard.
And I know that you like HR processes. So in terms of like what VCs can actually do better, what do you suggest in terms of finding the top talent for VCs?
Yeah, my gosh, VC recruiting is not great. It's very, very inefficient. I think there's like an over reliance on like the network and the referral piece. And it's really because it's easier. Like if somebody I trust is like, hey, hire this person, I'm like, all right, cool, let's do it. But like actually assessing who's the right fit and who is like gonna do a good job requires quite a bit of time and effort and energy. And like some funds are really excited, dedicated to that, and some funds are not. I would love to see funds put like actual thought into how they assess you. I would love to see standard questions that everybody is asked. I would love to see funds be really clear about how they're using referrals, right? Like, hey, we're only using referrals as a way to like decide who we talk to, or we're only using referrals as a way to put one candidate over the edge at the final stages. So I think that would be really, really nice to see just standardization. And then like the last thing I would just love to have clear communication. You get ghosted so many times by VCs or they don't get back to you. They're not clear about the next steps in the process. So just having like a clear cut process and being respectful to candidates to be like, hey, we're moving forward with other people, like wishing you the best instead of just never responding.
And this is why, you created VC Unleashed with another couple of members. Is that because it's so unstandardized? People actually don't even know like what is going on. Hey, like when is the interview? How long would this last? Like what exactly is here? So talk a little bit about VC Unleashed. How did you meet Michelle, Fuad, and Teak to really start this amazing community of aspiring VC?
During my MBA. So we met on a WhatsApp chat And really it was, yeah, we were all at different schools. So we met on a WhatsApp chat, and really the goal of the WhatsApp chat was MBA, like people of color who were in their MBA who were working, who were wanting to break into venture. And I think all of us just had the same realization of it is just so dang hard. And a lot of what makes a successful pivot into venture or just getting a job, raising fund is the person seeing themselves in you. And venture is like, notoriously lacks diversity. So trying to convince somebody who does not look like me to see themselves in me was really, really challenging. And I think something that our entire community kept coming up against of we are talking to people who, no matter if we have the same life experiences, just do not seem to see themselves in us, and that's limiting our factors and that's limiting our ability to break into venture. So the community came together to say, well, how can we make sure we kind of give you no reason to say no to us? How can we share job opportunities together? How can we prep together? How can we develop all the right skills? All the things you're saying about, right? Like, how do I write a memo? What does the case study look like? Like, what the heck is a cohort analysis? So creating a community to sort of prep each other. So not that all of us are going to get jobs, but all of us are putting our best foot forward for the jobs that we're interviewing for. So that was the genesis of the community. We started it in 2021 during our MBAs, and Michelle, Teak, and I have found our ways to full-time venture roles through that. Fuad ended up going a different route, but yeah, it's been awesome to continue the work post MBA and post working in venture. We have about 1,000 folks in our Slack community. And for anyone who wants to join, you just go to vcunleashed.xyz. There's an Airtable form that you can fill out, and we'll email you the link to join the Slack community. We have done, I want to say, over 30, virtual in-person events. Virtual events are focused on coaching to create the right skills. So we've done, breaking into VC panels. We've done cap table analysis. We've done how to write an investment memo, all of those sort of hard skills that you require, as well as community building events to bring folks together. So we just hosted a holiday party in San Francisco with some of our partner orgs in the space, like Black VC, VC Familia, Latinx MB. We host our annual conference. So next year will be year 5 of our VC Unleashed conference called Shift VC. We've alternated it between San Francisco and New York over the past 4 years. And really, the VC Unleashed conference is a dedicated day of programming for aspiring VCs and early stage VCs, early career VCs, getting into how do you land, how do you break in, to how can you be successful once you're in the role. So that's a little snapshot of what we do. Yeah, I think we just crossed 4 years, which is really exciting.
Yeah, and I'll make sure to put that in the description below. In terms of building this entire community, like how did you guys even start? Did you guys have like former experience before? I know you did a little bit with Concrete Post Capital, but like how did you guys even get the first members, get all those panels and conferences going? Was it just like, hey, let's just do it? Or was there some tips in how do you build such great community?
Yeah, I have to give a lot of credit to my co-founder, Michelle, who really taught me and showed me a lot of how to do this. And it's certainly just deciding one day this is what I want to do, and then it's executing it like that. That was just it. And I learned so much from her on like how to build a grassroots community. So I think a really important thing is just asking the community. So she always does great about, hey, we don't know, like ask the community, like who do you want to hear from? Get some feedback, and then let's figure out how to reach that person and say, hey, this is our community, this is what we're doing, like 30 people want to hear from you, would you be open to coming and chatting with us? I think we certainly played the student card constantly of like, hey, we're basically a community of students, we're trying to learn, like please come talk to us. And I think you just need a few small wins to build credibility. So figuring out what platform to communicate on as a group, starting to put programming together, all of that. And like, the first few events were small. And then as we got a brand name, as people had positive experiences, started getting bigger and bigger and bigger. And yeah, I think it's just deciding you want to do it and trying to make it happen. And we're a nonprofit, right? So we're not trying to raise money, or we're not trying to be extremely profitable, is what I'm saying from like startups. We don't have necessarily like a startup's requirements. So we do what we can. We share kind of the impact and the value that we're driving, and we look for mission aligned people who want to support and be a part of that.
And that's all it takes is that sharing
Yeah.
ideas and working together to really just like get to where you are is a collaborative process. So looking ahead on the other side, what trends in venture capital are you most excited about right now? And what is being overlooked in the market?
Yeah. Well, certainly, as any investor, I must be interested in AI, and I certainly am. Given my role with Intuit, I've spent a lot of time on AI accounting, AI accounts receivables, and various parts of the CFO tool stack. So certainly remain really interested there. There are quite a number of startups building, but I think there are some interesting opportunities and like market leaders to be made there. I've been looking a lot into verticalized marketing as well. So startups that are trying to automate what a marketing agency does. And they're typically starting with individual verticals because you have to build a deep domain expertise and specific nuances when you're looking at various marketing forms for that vertical. So spending time there. We've also been spending a lot of time in the next gen ERP space. So there have been a number of startups getting funding there. So trying to figure out what's right for Intuit. So those are some, kind of hot areas that I'm spending time in. Otherwise, remain super interested and excited in like your classic fintech businesses across consumer payments, some lending, and then a lot of where is AI being used most effectively to automate the work or to create a better product.
Yeah. And the ultimate thing is find a solution that people actually want. I know you talked a little bit about how to break into VC. For our viewers who needs an actionable plan to implement right away, what would be your recommended 6 step plan? So that's two plans, one for MBA students who are maybe in the minority, and then one for consultants into VC. And then say month 1, 2, 3, 4, 5.
Sure. I actually think this is across the board, no matter whether you're an MBA student or a consultant. I think you have different ways to get in front of people, but I think in generally, I would spend month one like understanding your own interests. Which areas of the startup ecosystem are you excited in? Like read Axios Pro Rata, read Strictly VC, spend time on social media sites, see what catches your eye. You're like, oh, all the B2B startups are really interesting to me, or like, oh, like climate's really interesting, or oh, fintech's really interesting. Like figure out where you're interested in fintech. So or sorry, in the startup ecosystem. So I would say month one is like your own self-discovery. Like, what do you like? What do you not like? What do you want to pursue? And then I would say month two is leaning in and reading more about the space you're interested in. Let's say you want to do fintech. That's the space I know, right? Who are the content creators that are writing good content here? We're writing good analysis who can help you get up to speed in the space and understand what's going on from an innovation lens and how that blends with incumbents in the space, right? How do startups and banks work together? Like, what are the regulation aspects that startups have to face when you're like a lending business or whether you're like a brokerage business? I think just educating yourself about the space, learning the latest and greatest trends is really, really important. And like through that, you should also be assessing what are the different communities I should be a part of, like who throws events in the space in my area. So I would say that's month two after you've like discovered what you're interested in. Month two is like dig in, like read as much as you can, learn as much as you can, and like keep notes. Like who are the startups you're finding? Who are the people you're finding whose like content you've really liked? You're like, oh my God, that person wrote a great like Twitter thread. Like write their name down, follow them, right? Like you need to just start paying attention to these small things. And then I would say like month three is about, okay, what's your game plan? Like now you know what you like. Now you've learned enough to be dangerous about the space. Like how are you going to differentiate yourself, right? Like are you going to do a podcast like you're doing? Are you going to write content, right? Like, are you going to, you basically, if you're trying to pivot and break into venture, like you need to create deliverables that show like, I can do the job. Here is something that, that demonstrates that. And for me, like, I really like to write. So I started writing blog posts on Medium. I've seen people do like a Notion page. I've seen people write a deck, right? It depends what you like, what you're good at. People who like podcasts will do like interviews with different founders and have a series like that. But I think you want to start to put together some content or some output that shows you are interested in the space and that shows what you can do. And maybe it's events, right? Like it's what I did with VC Unleashed. Like maybe you're doing community building events, maybe you're doing panel discussions on fintech, maybe you're doing something else. Just what is going to make you stand out, I would say, is month three. And then like months 4 through 6 to me are executing. Like you need to repeatedly do it a few times. It's not just, hey, I wrote one blog post, we're good to go. I did one event, let's good to go. It's like do a few of them, like build a track record. And I would say, the entire process, like months 1 through 6, you should be looking for roles, understanding what kind of funds you're interested in, seeing where there are openings. You are most likely to find the best roles in months like 5 to 6 when you are you have a clear idea of what you want, you have some clear deliverables that can sort of augment your application. And so it kind of depends how much experience you're coming with. Like if you previously worked at a startup or in an investment role or something like that, you're likely to have an easier time with all of this. If you're coming in totally net new, like I was, honestly, it took me like over a year before I was ready to like have a really meaningful interview with somebody. And so maybe one other thing I'll add is like looking for internships or part-time work experience as we're going through this process as a way to augment your experience. That can come in between, I suppose, like months 3 to 6. It can come after 6 months, like whatever you want. For my interviews, I primarily talked about my internship with the early stage fintech and my internship with the VC fund. In my full-time interviews, I barely talked about my work experience at Deloitte. People really wanted to see like tangible deliverables and hear my experience in the space and around the space.
So in terms of Deloitte, right? What was the skills that you took from that? Was it the math part and the financial projections? And like, if it is a math part, then how much ratio in terms of the growth stage VC funds is your job to do that math versus that people's type of business?
Yeah, I think my role at Deloitte gave me really strong like people skills. Like my entire role is client servicing, right? So how can you build effective relationships with people and how can you maintain them? And coming into venture, I realized a lot of what you need to do is build a relationship, maintain it, and then make sure you're getting something out of it from your professional connections. So I think that was a learning, but I certainly think people management was really important. I think something that was a little difficult to translate was just how technical I had to get with my role, like understanding how like product build works. Like I was basically a PM across a couple of different systems for like specific processes. Being able to level and talk to founders about that, like I don't know, I had the joy of Jira and use cases and like testing requirements and things like that. So that that was also helpful. I think given it was like within HR and it was within enterprises, it was a little tough for me to apply that to fintech. So that's where like I had to really double down on the content and show that I understood the subject matter. Whereas maybe if I was going for like enterprise SaaS, I would have had an easier time where I'm like, hey, I know how the product build for this works. This is what I've done. And so I think again that comes to you need to look critically at your background, your experiences, and where you want to go, and like how do you fill and plug the gaps in a way that's fun for you because you're spending all of your free extra time doing this. It should be something that's fun for you. And there are just like so many different levers you can pull and so many ways you can be creative.
And that's the amazing thing is that Tanvi basically just proved the fact that even though you might have limited knowledge on the really specific thing that you have to know for VC growth stage fund, even at a growth stage fund, like you can kind of almost start net new and you can learn it. So if you understand how to build relationships, if you understand social capital, you will be golden. So now for a few rapid fire questions to wrap up a few words or sentence. Ready?
Let's do it.
If you could invest in any startup from the past, which one would it be?
I would invest in Robinhood. I still remember signing up for the wait list, and I remember the pains of trying to open a brokerage account when I was in college. It's been some interesting ups and downs with Robinhood, but I think it basically created no fee trading. It pushed all the other brokerage firms to do that, and I thought it's an amazing product that brought a lot of access.
Yeah, I remember trying like Schwab and Fidelity, and it was so hard to use. What is your favorite place to travel to, but have you yet?
I really want to go to Australia.
What is the best place to find VC firms to apply to?
John Gannon blog. He has every single job ever. Great resource.
Yeah, and for the people who's listening to this, John Gagnon blog has moved to, I think it's Venture 5 Media. So that's a new website. And
Yeah,
then,
and 100%. If any events that you see that Venture 5 Media is doing, John's a great resource. Highly recommend.
yeah, and sign up for his newsletter as well. Because I think he really posts tons and tons of stuff about that. And there's tons of events that you can go to as well. So what is one fun fact about you most people don't know?
I went to boarding school for
Was it a fun experience?
had its pros and cons. Yeah, I it was in India, so I was there for 5 years, and certainly taught me a lot of independence, how to manage yourself, and how to be really disciplined.
And lastly, is there any thoughts you want to finish or we didn't get to cover on this pod that you'd like to talk about?
I think the last piece I will share is that at the end of the day, it really comes down to like you can do your best, you really, really try, you build all of the skills. And it really comes down to just getting just a little bit lucky, So keep at it. And it took me like a year and a half of interviews before I landed at Intuit. So it takes some time and like try to come up with holistic life goals when you're trying to make the pivot, right? You're like, okay, in the next year I want to break into venture, but I also want to develop XYZ hobbies. I also want to work out. Like I also want to stay in good health. I think trying to define your life success in more ways than I just have to land this role is really, really important. So I would just say do your best, be kind to yourself, be patient, and it'll hopefully eventually work out. And if not, just keep trying or figure out a good backup plan. So
Yeah. And make sure to also get like a couple of friends to keep you accountable, where it's like right now, you can literally see that Tanvi, Michelle, and T has gotten VC roles. So that was amazing, Tanvi. For anyone listening who wants to learn more about you or your firm, what's the best place to reach you?
yeah, I would say LinkedIn is the best way to reach me. And then I also wrote a 3-part blog series on breaking into venture. So if you go to tlal.medium.com, you can find it. It is like over 18 pages. So literally everything I could think of or remember from my VC recruiting days, even things that I have since forgotten are in there. So would say please read that. I also wrote a blog post about what corporate venture capital looks like, so you can learn more about that. And if you want to learn more about Intuit Ventures, you can, I think it's intuit.ventures.com, intuit.com-ventures. You can check out our portfolio and learn more about us.
Yeah, and I'll put all of that in the description below. Out of
Thanks.
everyone you know, who are two amazing VCs that you would recommend as future guests to our podcast?
Well, I would absolutely say my co-founder Michelle is an amazing person to have on. And ooh, I'll have to get back to you on the second one. You'll have to let me know about maybe what different perspectives you want to round it out.
Awesome. Thank you again, and thanks to everyone who's listening. Comment a question you want to hear from Tanvi or our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share it with someone who's interested in getting into venture. We'll see you next time on Break into VC.